Yo guys, welcome back with me, Kenwilboy. In this video, I'm going to tell you Forex trading mistakes you should avoid as a beginner. And this is the most common mistakes that I've seen over and over again that beginners make. This is also why 99% of traders fail. Okay, for those who don't know me, I'm Kenwilboy. I'm the founder of fortunomarkets and a professional trader with over 10 years of experience. And I have also made more than $1 million in profits. So let's dive straight in. Number one, top trading mistakes beginners make is not going full margin on their leverage trading account. I've seen over and over again, well, you might have heard on YouTube, Instagram, TikTok, like everybody's talking about, oh, use small lot sizes. Oh, use limit your lot sizes. Trade small position. Well, here's my argument. If you're trading with leverage, like you're doing in Forex trading or basically trading with leverage, trading futures, Forex, everything with leverage, well, leverage trading is inherently high risk. It's a high risk instrument by itself. So why do you try to limit the risk, but you're still going to high risk instruments? You get what I'm saying? Like, the first reason why you trade with leverage in the first place is that you want higher gains, but with higher gains, higher potential gains, of course, it brings higher risk inherently. It's how the world works. High risk, high reward. Low risk, low reward. But then, what a lot of guru and mentors tell you is that, oh, you should try using small lot sizes, small position sizes, only open using 1% of your margin, using 1% of your balance as a margin for your position size. It means that you're lowering your potential gain, while also, of course, inherently lower potential gain brings lower risk. But my question is, why trade with high leverage in the first place? See? Why don't you just lower the leverage? I think it's better for you rather than trying to limit your lot size, position size, only open 1 or 2% of your margin, only open a position with 1 or 2% of your balance as your margin for your position. It's better to just lower your leverage or don't use any leverage at all. That's my advice, and I've been doing that for years. And take a look at me. I'm here doing that. I've made more than $1 million. So what have you made? I'm not trying to brag or something, but I think that's the best way for you to trade. If you're going with leverage trading, with leverage, with futures, Forex, you should go all in. Then how do you limit your risk? Well, you limit your risk by only put in the money you can afford to lose. Only on a small portion of your money. I think that's the better way of going rather than you deposit everything into your trading account, then you try to limit your lot sizes with a small position, you limit your lot sizes. I think that will not work, okay? And second mistake is using stop loss on their leverage trading account. Well, it's just like the first reason. Why did you try to limit your risk, thus also limit your potential gain, while you're trading with high leverage in the first place? So it contradicts with each other, contradicts with itself. For me, if you want lower risk, just go with the low risk instrument without any leverage, like the spot market or for stocks, crypto, but the spot market, not the futures one, and or maybe some bonds, government bonds, something like that, index fund, the low risk instrument. So for me, the strategy is to split your money. You put a small portion of your money into high leverage trading account, like all these guru are trying to teach you, the Forex, the futures. You put in there and you go all in with that money. If you blow it, it's okay. It won't hurt you. That's the better way. Okay, next, number 3, trade using the money you can't afford to lose. See, this is related with my first and second point, because when you try to limit your risk per trade basis, on the trade basis, you will feel invincible. Like, oh, it's okay. My risk is limited. Oh, my stop loss is at minus $100. oh, my stop loss is at minus $1,000. It's okay. I will just put all my life savings in my trading account. Well, that is what's going to happen if you try to use stop losses or using small lot size. You will feel that, oh, Forex or this leverage trading is safe. I can limit the risk. I can limit my losses. That is exactly what will happen if you try to limit your risk. You will think that futures or Forex trading is a safe instrument. But to be honest, it's not. It's a high-risk instrument. So you should only deposit the money that you can afford to lose in the first place. Don't ever use the money that you can't afford to lose. Okay? Remember that. Next, number 4, focusing on how to not blow your account. See, all of these guru mentors out there are trying to teach you, oh, this is the way to not blow your account. This is the way to not get margin call. This is the way to not get stopped out. For me, blowing my account is part of trading. It's okay, no problem. Because when you're going all in, full margin, you know, you can only lose 100%. Keep that in mind. You can only lose 100%. But the potential upside is 1,000, 2,000%. So it's an asymmetrical bet. I would call it that. Asymmetrical bet. Where the upside is 1,000%, but the risk is only 100%. So it's 1 to 10 risk to reward ratio. I would like to use that kind of strategy. Then rather than using stop losses, using TP with like 1 to 3 risk to reward ratio, it's not my thing, you know. For me, I don't manage my risk per trade basis. I would rather manage my risk per account basis. So, okay, this is account number 1, account number 2. I go 1 trade, 1 account. Boom, all in. Boom, $100, and I would flip it to $1,000. Boom. Okay, but if I lose, how about if I blow my account 4 times in a row, 5 times in a row? No problem. I would just make it all back in 1 trade. For example, I lose 5 times in a row, and on the 6th trade or my 6th account, I make 1,000%. Well, I would still come out on top. I would still make a profit, right? See, you know what I'm saying? It's better to not use stop loss. So stop out is your stop loss. Remember that. That's my way of trading. For me, I separate my money. My big portion of my money, I put it in somewhere safe without any leverage. But small portion of my money, I go all in into Forex or futures like gold, Bitcoin futures. All in. Boom. 1 single trade. Boom. Maximum lot size, maximum position size. Well, this is exactly what other gurus, other mentors don't teach you. Because, I don't know, maybe because they don't experience it yet. But once you get enough experience, like me, I have more than 10 years of experience, you started to realize like the better ways of doing. Well, with stop loss, it's good. It's good. I'm not saying that it's bad, but it's okay. But with this method, the full margin method, where your stop loss is actually your stop out, I think it's the best way. Not good, but it's the best way. Okay, so yeah, that's it. And if you want to start trading, you can use fortunomarkets. I think now fortunomarkets is the best trading platform or brokers out there, because there's thousands of brokers out there you can choose, but fortunomarkets is the best out of all. Why? Because first, they have very low cost for trading, almost zero fee. So you're trading for almost no cost at all. It's the first in the world. They have zero commission, zero overnight fees, and the spreads are almost zero. So incredible from the cost perspective. Secondly, from the regulation and fund security side, it's very secure. It's a solid company. You can see that fortunomarkets is getting more and more popular all around the world. You can check on YouTube, Instagram, TikTok. More and more people started to use fortunomarkets. They're switching from their old brokers to fortunomarkets because it's better. And you know, if a lot of people are using it, it means that the company it's good, right? Because everybody's using it. Okay. Next, number 3. They got one of the best affiliate program if you're into affiliate marketing. They gave 70% revenue sharing with affiliates or IBs, introducing brokers, if you're into affiliate marketing. So why should we choose other brokers, where other brokers only offer like 40 to 50% revenue sharing, like IB rebate, while Fortune Markets gave you 70%. So if a client pays you $10 per lot in fees, the $7 goes back to the affiliate. So the money goes from the people to the people, you know, from the people for the people. So they only take a small cut. Other brokers, they take big cuts, but fortunately they only take small cuts. So it's a good thing. Yeah. Thank you for watching, and that's it for today. If you like this video, don't forget to leave a like, subscribe, and hit the bell icon down below. Peace out.